All right, awesome. Very delightful as per usual, Daryl. Thank you for the introduction. And let's do a quick sound check and make sure you guys can hear me A-OK. All buenos. Excelente. All right, so first of all, let me just clear the air here, just for those of you that have been on webinars with me before. I do not have a new indicator that I'm trying to sell you. I just say that just upright, this is a review. Now, at the end of this, for those of you that don't have these indicators that most of you already have, I will show you how to get them, but I want to just emphasize that I know for those of you that were just on a series of webinars about once every 6 months or so, we will launch some new stuff if we find stuff that's good. So I just want to, for those of you that were kind of hoping, like, is this really going to be something that we're just reviewing stuff that we already have? The answer is yes. And then for those of you that may not have the stuff that we've already introduced between last week and over the last couple of years, we'll just show you where it is in case you are interested. So new toys, maybe later. Look, the thing about it is there's not a, in terms of new toys, it's just if there's a new toy when it's like, wow, this is something that could help, right? So if it's not anything new, then great. So what I want to do right now is just really just review tools that we just released. I know though, for those of you that just got those recently, there's still some questions there. So I want to go through the process of just understanding kind of how they work. And then also just in this kind of a market, as you guys may have noticed, it's pretty volatile. And so the key is just understanding which tools to use when. Yeah, absolutely, Gary. And so we're going to spend some time on that as well. So at the end of this, the goal is that, and again, whether you use these or not, it doesn't matter. If you use them, great. The goal is I want to show you exactly how I'm using them. If you're not familiar with these, at least you'll understand the concept. So really, and I like this at the top here, it just says, this webinar really could be called, Where Do We Look and When? And as you guys know, there's always different market conditions. And right now, I would say, to me, Walmart right now is a stock that is kind of indicative of what I would call more of a normal market. So Walmart right now doesn't care what the S&Ps are doing, doesn't care what the NASDAQ is doing. It is really kind of more it's more of a reflection of what the S&Ps do most of the time, okay? They're kind of quiet. They're going back and forth. And as you guys know, my favorite setup in all of those situations is just to be patient and wait for a squeeze. And the idea is that when you see the red dots, and by the way, if you guys don't know what a squeeze is, we'll talk about that a little bit later. So again, if you're newer to this stuff, don't worry, I'm going to dive into it. And I'm assuming a lot of you guys already have this stuff, so I'm not going to belabor the point either. But my favorite trade of all time, regardless of the time frame, is if there's a squeeze, I know that there's a high probability of a release of energy, okay? Because things have gotten quiet and we're going to either release energy to the upside or release energy to the downside, okay? So if I see red dots and then I see this little buy signal right here, which is the RAF tool, okay? It's one of my favorite tools. And as a bonus, if I see that all the EMAs are crossed positive on the daily, 2-day, 3-day, 4-day, weekly, and monthly chart, then I know that this has got about an 85% chance of going higher, okay? And how much higher is it going to go? Well, it's one of those things where, again, about an 80% chance that it will reach its profit zones and terminate at that level, okay? So we'll talk about all that, but if there's only one trade I could do, that's it. It's easy. You don't have to think about it very much. Of course, though, it's ideal in a very specific environment, and that's when essentially a stock that you're looking at or the markets are trading in a quieter range. Typically, they've had a period of about 3 or 4 weeks where the average move is less than a 1% net change, all right? Obviously, over the last 3 weeks, that's not the environment that we've had. So we also want to understand what kind of tools to use in all kinds of market conditions, all right? So that's one kind of square that we'll cover. Let's just go to the bottom here. So if we go to the bottom square, we're going to see that, look, I just talked about the squeeze and how much I really love this indicator. Well, we'll also say, like, okay, well, guess what? You can also see at a glance if there are squeezes on other time frames. Okay, that's a cool tool. And then I talked up here going like, okay, at a glance, I can see if and by the way, the moving average crosses I use here are the 5 and the 21. So if the 5-period moving average is trading above the 21, I want to know, okay, because that designates an uptrend on that time frame, So I can see right now, and then this is a chart that was taken today, that the daily, the 2-day, the 3-day, the 4-day, the weekly, and the monthly chart are all in a 521 EMA cross to the upside, which gives me extra confidence that this squeeze is going to be successful to the long side, even when the markets are shit, as they are right now. In any market, there's always going to be long setups, and there's always going to be, short setups. But I like this one because it just showed how defiant the setup was in relation to the rest of the market. Along the same lines, though, I want to see at a glance on Walmart, are there squeezes on other time frames? And right now there's a squeeze on the 15-minute chart, the 10-minute chart, the 4-minute chart, the 3-minute chart, and the 2-minute chart, and the 1-minute chart. Now, to be honest, I'm not so excited about those, but I do always want to know if there's a 30-minute squeeze or a 60-minute squeeze or a 2-hour squeeze. And we can see at this point, Walmart has expended its energy, and we're at a point when we want to be taking profits. I do owe 25 cents to the swear jar. Now, I'll also let you guys know that I am sipping on a tequila and club soda, so the swear jar may get a little full as my inhibitions go out the window. So a couple of other things I like to look at here are, you'll see these arrows. I will talk about what those are. Those are very important in a market like this. And of course, we've got these multi-bands. We've got the multi-bands and all that kind of stuff. So anyway, this is kind of my, and again, these are all, if you guys have been with us for any length of time, you probably have all these already, or you have most of them. And so that's what we're going to talk about, is just kind of how to use them. And again, if you're newer, at the end of this, I'll show you, like, we'll have a discount code for you. You can say, look, just go over here and you can get them. But again, I'm assuming most of you guys already have these. So that's what we're going to focus on, is just how and when and why to use them. So, no, it sounds good. It sounds good, Raj and Alex. All right. So essentially what this comes down to, in fact, let me have a sip of my hooch real quick. What this really comes down to is that when we're looking at these markets and they're being, the way that they are right now, which of course is a little nuts, is we just want to ask ourselves how to watch, how to measure, and how to anticipate, okay? So if we're looking at this, and as we all know, that there are some moves that are quiet and predictable, and I'll be the first one to say that that's my preference. That's just something that I can plan more for. I can manage, my family, my wife, my kids, everything that's going on. The quiet and predictable Walmart trades off of a daily chart are my first choice, okay? But I also know that is not going to happen all the time. It's going to happen a lot of the time, but there are times when the markets are very volatile, just as they were back in February, which was a fun time to trade, just as they were in 2008, which was one of the best trading years ever, and just as they are now. And it's been a little weird right now, and I'll talk a little bit more about what's going on right now. What's going on right now is a lot less to do with broad markets as it is with kind of like some of the 5 biggest stocks, and it's kind of more the action of what's going on there. So very nice. So if we look at this in terms of, what I'm looking at here, and this is kind of that upper left square, is, okay, great. At a glance, I can look and say, based on what I know, is like, okay, at a glance, I can look at this and say, okay, it's bullish. So I want to focus on the long side. Now, obviously, if we're looking at the NASDAQ right now, that's going to be bearish. So we'll take a look at that. And there's a couple of things on here that I like to know. I do see right here, these are called top hats. And by the way, when you reach that level, it's such an extreme level that actually does put in a short intermediate top or bottom. So I want to know when that's happening. Okay. Of course, I want to know when there's a squeeze. And when there's a squeeze, when I get a trigger, right there, that's my, it's like, okay, cool, it's safe to get in. And then I can see when the 10x momentum bars turn to green, now I can just kind of either add to my position or sit back and relax. And I'm just looking for a nice, easy ride right up into these predetermined, mathematically, essentially highest probability profit zones, meaning that it could go beyond that, but probably not. And if you're wondering whether or not to get out, just be patient. This is most likely where it's going to go. All right, this is a really cool mathematical relationship between the stock price and its relationship to its 21-period moving average. So really nice stuff there, and obviously that's what I love the most, is when that happens. But of course we know that, the markets can be different. So there's other times it's kind of like, and I would say that this has been the case a lot of times in the last couple of weeks, the building is on fire. This is not a quiet market. And if you don't have a quiet market, you're not going to get any squeezes, and you just have to jump into the momentum, or at least not fight it. Okay. It's okay to jump into the fray, but it's also okay not to fight it, not to do much, to sit in cash and wait. So what do I mean by that? You're watching the NASDAQ here, and it's like, my gosh, I want to buy this dip. We're at support. You ain't buying the dip if you've got red 10x bars with dots, okay? That means you have max downside momentum, MOMO, with the dots with volume, okay? And if you have that combination, you never, 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 ever fight it, okay? You can go with it, you can chase it if you want to, but if you try to buy something like that, you're just asking to get splattered, okay? And that's the kind of stuff you want to avoid. So what I like to do is have a combination of these tools so I can kind of understand like when the market's kind of quiet, and I can kind of do my thing and set up trades that last 3 days to 3 weeks. But I also want to know when to avoid the price action, okay? If I don't want to do, if I'm in a period of time where like I don't want to do a lot of day trades, and I don't want to worry about overnight, I also want to understand that as well, okay? So and everything in between. So the key is to understand the natural market cycles, okay? We want to understand when they are pausing. We got to understand when they are accelerating, okay? That's key. When they're thrusting, when they're reacting, and to be able to play the current hand that is being dealt by the markets, regardless of what it is, okay? So that's what we want to look at. And remember, and I can't emphasize this enough, there are 3 positions that we can have. We can be long, okay? We can be short, and we can be flat. And by long and short, that's interchangeable. We could be long stock, okay? We could be long calls or whatever. We could be short stock. We could be short futures. We could be short calls, or we could be short puts, regardless. Bullish, bearish, or flat. And there is no shame in just being flat and being patient. So some of this too is understanding like, you know what? I really don't want to get into the ring in this environment, and it's okay to be flat. It's okay to sit there and watch and have confidence that these tools will trigger you into knowing when it's okay to get back in, to start trading in a way that meets your own goals and your own objectives. All right. So you don't ever feel like you're forced to have to catch every move or anything like that. So that's what these tools are for, is to kind of keep us on that path. And so to understand that, we've got to understand the nature of the markets. Okay. And once we understand that foundation, then essentially what happens is all of these tools make sense. All right. So the first thing to understand is that the markets cycle on all time frames. Okay, and there's a couple of keywords here, but it's cycle and all time frames. Okay, so stocks, and when I say markets, that could mean Amazon, it could mean the S&P 500, it could mean bonds. It's anything with a chart. Okay, stocks and markets trade in measurable cycles, whether they're trending higher, lower, or sideways. And whether it is a 5-minute chart or a weekly chart, the cycles are all the same, just on different time scales, okay? So we may be in a situation where on a monthly chart, we're in an uptrend, okay? But this little blip here on a monthly chart is absolute devastation on a daily chart, okay? Which, by the way, is what's happening right now. We just want to understand that this is happening on all time frames, and we kind of want to know what's going on all time frames. All right. These ebbs and flows and things like that, they do roll into and impact the other time frames. So the other thing we want to keep in mind is that each of these cycles and ebbs and flows typically last the same amount of bars or similar. So on a weekly chart, a cycle will last, let's call it 10 bars. And on a 5-minute chart, you'll still get a 10-bar cycle. Obviously, on a 5-minute chart, that cycle will last 50 minutes. Okay. And on a weekly chart, so did I do the math right? So 10 bars times 5 is 50 minutes. And then on a weekly chart, of course, 10 bars would be 10 weeks or 50 trading days. But it's the same cycle. It's just playing out on a different time frame. Okay. Hey, Bob, welcome. So the process of, so as you guys know, and I say this all the time, no market goes straight up or straight down. Even during the recent selling we've seen, no market, it's not going straight down. You have these violent up moves and then these violent moves down. It's just, everything is just compressed at this point. So the process of traders taking profits, chasing trades, okay, a lot of this is emotional, fear and greed and euphoria at its best, okay, getting stopped out. One of the biggest things that's causing the predictability of cycles these days is trailing stops, okay? Auto trailing stops have actually increased the predictability of these cycles because everybody's using the same damn software, right? So they're putting it on their trailing stop. And it's actually increasing the predictability of these ebbs and flows. So the process of traders taking profits, chasing trades, getting stopped out, shorting lows creates ebbs and flows in the market on all time frames, whether you are a day swing position trader or even a long-term investor. Okay. So yeah, they're actually similar, believe it or not. Whether it's the Nasdaq futures or Amazon, believe it or not, they're kind of similar, and we'll get more into that. So yeah, no problem, Ralph. So the ebbs and flows are readily visible, okay? And again, it's always, I always joke on a PowerPoint, you can always find nice, neat things, but believe it or not, these things happen more like this than you would think. So, you got an uptrend. Obviously, uptrend is higher highs with higher lows. Okay, this is an important concept, so please remember this: higher highs, higher lows. Sideways trends, equal highs, equal lows, and of course, downtrend, lower lows and lower highs, right? And it's one of those things that's a textbook thing. It's kind of a throwaway. It's like, okay, that's obvious, right? It's obvious in hindsight, but if you understand that, then the whole key with this is understanding how to recognize this in real time and what tools are actually telling you that this process is unfolding, okay? So that's what we want to look at. So a key point here is as we progress through this presentation, just keep in mind that reversion to the mean, because I always say, if I say reversion to the mean, all that is that is the price level, that is the level where price is likely to return, okay? Now, it's not guaranteed to return, okay? When WorldCom or Enron started to fall, it wasn't able to revert back to the mean because the executives in charge ran it into the ground and the company went bankrupt, okay? So that's an exception to that rule. But even a high-flying stock after 3 days of short covering like Tesla will revert to the mean, okay? So that's guaranteed. Again, with the exception of an Enron, with the exception of a WorldCom, of a company that goes out of business, okay, you can't retrace if you go to zero, every stock reverts back to the mean, and it's important to understand that, okay? It's like a law of attraction kind of a thing. So we got to understand that. And then from there, and it's on whatever time frame it's on. And then we need to know when stocks are powering away from the mean or dive bombing below the mean. Okay, so if this is the mean, think of it as a 21 period moving average or whatever, stock price is either moving away from it, okay, or they're retracing back to it. All right, so we just want to understand that kind of cycle. So that in a nutshell is trading, is understanding the cycle and being on the right side of this cycle. All right, it's our brains and ideas and thoughts on what we think should happen next that get in the way, when really we just want tools to tell us what is happening without us inserting our opinion into it. Okay, so what I want to do is I'm going to start with the 2 new tools that we recently introduced. I know a lot of people have had questions about them, so they're great because they flow into this perfectly, and then we can match in the other indicators and how they work. Did you, Derek? Oh, awesome. I know I don't know, David, if you're on here, but a couple folks that had some bad experiences with WorldCom and holding onto their stock, which is not fun. So let's dive into this. So ebbs and flows are all about the MOMO. So MOMO is a short slang for momentum. So whether momentum is just starting, or equally, if not more important, when momentum is losing steam, signaling that the next pullback / retracement is in the process of setting up. Okay, knowing this in advance helps us to time trades and understand the price action that's unfolding. So instead of hanging on too long only to watch a profit turn into a loss, or getting out too soon only to watch it continue to move without us. These are the two cardinal sins of trading. If you can't get those right, then what happens is that you eat like a bird, okay? But then you do what? You defecate, I'll be nice here, like an elephant. So, well, and if you eat like a bird and shit like an elephant, you have small wins and big losses, and essentially there's no account that can withstand that trend. All right, so we want to be able to do the reverse, kind of when we eat, make sure we're taking bites like an elephant would, but when we have to defecate, let's do a little bird dropping, and that will help our account and our marital status stay positive. But to understand that, we have to understand the ebbs and flows and make the ebbs and flows essentially override. Understanding the ebbs and flows, you got to have that override our own mental psychology, because anything our brain is telling us is wrong, all right, pretty much. But if we just override our psychology with our understanding of the ebbs and flows and specific tools that can measure those for us, and then we just learn to ignore our psychology, then we get on the right side of this stuff. So let's start off with this. So the first thing about ebbs and flows, okay, so how do ebbs and flows work? Well, ebbs and flows are a reflection of momentum. So if we really want to screw with ourselves and our brain, we can look at, these are the 18 default time frames on Thinkorswim, from the monthly to the daily to the 4 hour, to the 15 minute, to the 10 minute, to the 1 minute. And if we just want to understand ebbs and flows, we could put a stochastic, slow stochastic, and an RSI on all those time frames, and then just keep an eye. It's like, oh, look at, we're overbought here, so we're probably going to pull back. Well, as you can imagine, first of all, that's too hard. And secondly, the human brain can only process so much information before it really starts to shut down. I don't know what the exact number is, but there's something like, after you've made like 48 decisions in a day, your ability to make new decisions diminishes exponentially. So this is also why a lot of people trading make money in the morning and piss it away in the afternoon. They've used up their good decision model. This is why when I get home after a full day of trading, if my wife starts asking me about things I need to make a decision on, I need to get a glass of wine and tell her to email me, and I'll get back to her in the morning. You can only make so many decisions a day before your brain shuts down. So the problem with this is that you're gonna have to make too many decisions too soon, and it's gonna exhaust your mental energy, okay? So from there, it's too much info. So although looking at all 18 time frames, okay, it's no, it is about the psychology for sure. That's awesome, Dave and Kelly. That's funny, Gator. All right, so although looking at all 18 time frames gives us an edge over the algos, it is frankly too much data to process for the human brain, and the key is to be able to see and process multiple time frames quickly without having to think about it too much, okay? So I'm not going to go through the whole, explanation and all that kind of stuff too. We're just going to cut to the chase. So what this is about is ebbs and flows, and this is a new tool we released last month, and it's called multi-range tool, okay? So what now we can do at a glance is we can say, okay, great. We're looking at the stochastic and the RSI on multiple time frames, and we're having it appear on our chart and just saying, okay, you know what? Here's TLT. The 4 hour chart and the hourly chart are now oversold because this is ebb and flowing. This is a time to get long, okay? Great. The next day we pop up. Now, guess what? The 30-minute chart and the 60-minute chart, the 30-minute RSI and the 60-minute stochastic are now overbought. Great. Let's take our profits, because we're not going to think about this. We're not going to project our hopes and dreams and fears onto this. We're just going to say this is an ebb and flow market, and we're now multi-overbought, so we're going to get out. And we're going to wait and wait and wait until we get oversold again, and then we're going to get back in, and then we're going to wait and wait and wait until we get overbought again, and then wait and wait and wait. So this is a chart as of today. So at the end of the day today, we are oversold. Now, what happens with this, and is that you can go back in the history and kind of see where it happened, at least on toss. But what you can see what's happening right now, all you got to do is look right here. So it's telling us the 60-minute chart and the 30-minute chart are oversold, and it's just kind of telling you that on the chart as well. So this is essentially how you can make a living in a choppy market, just catching the ebbs and flows. So this is really solid with things like the S&P futures. It is solid with stocks that are trading in a range. Yeah, those 30-minute levels are fantastic. So I love this tool. Now, so that's the first thing. So that's a multi-range kind of a tool, and that's what it's used for. It's these minute ebbs and flows, all right? But what I've found is that it's also useful for helping to time bigger trades like the squeeze, okay? So if we look at the squeeze here, this is a trade that we had done a little bit before the class that we had done, and we had this great setup, squeeze and Boeing. And you can see here what happened is we got into it, and you can see this little pullback here. Now in hindsight, and again, in hindsight, it always kills me when everybody, what I call it, trading by PowerPoint. It's like, oh yeah, I just pulled back here a little bit, and of course you held on to it. I'm calling bullshit on that, because that was a 5-day, $10 pullback. And if you own calls on that and you're watching it go down day after day after day, and you're losing intrinsic value and you're losing extrinsic value, and your options are getting decimated, psychologically, it's very, very difficult for a human being to hold on to that, even though in hindsight, right, it's very positive. So what's great about this tool is it helps balance out all what I call that psychological babble that goes on. So first of all, while the squeeze is taking place, you can use it to time an entry. It's like, oh, cool, I got a 30-minute buy signal here. So at least I can start building up a position. And then it's like, okay, it's going. There's no over bots here. So we did pull back a little bit. That's normal. Got another oversold reading. Awesome. I could add to my position there. But now at point number 3, we're getting the 4-hour and the 30-minute overbought. Okay. When this happens, it has to work itself off. WIO, work itself off. Now, in this case, it's not like it crashed. I mean, it didn't come all the way back here, but it did pull back 10 painful dollars over 5 painful days. That is a sucky position to be in. However, you could take your profits on this, reload down here at point number 4 when the 120 and the 30s go back into oversold, and then take the next wave up. Okay, so what is the difference in something like this? The main difference, you got to think about like this, and yeah, look, if you could hold through the whole thing, great. If something like this freaks you out, then this can help out quite a bit. So let's say right here, we are at 356. So you buy the 350 calls for $8. We got a nice rally up here into 372, all right? So let's just say that there's not even any premium left. 372 minus 350 is $22, okay? Now, if you held on to this and you come all the way back to 364 with premium decay, all of a sudden your $22 options are at $12, all right? If you had a 10 contract trade, you just lost $10,000 on a pullback. That sucks. Instead, you flip out your $8 option for 22 and you see these signals. Then here, at 365, you buy the 360 calls for $8, and then you flip those out again at $22 as well. That's called rolling your deltas, all right? If you've got a 350 call here and it goes all the way up here, your deltas have gone from like 70 to 90, all right? Your risk is now increased exponentially on a pullback, because a 90 delta, of course, is going to drop 90 cents for every dollar versus only 70 cents. But if you can flip that out, roll into now a lower delta option, you can not only make more money, but you're taking a lot of risk off the table. So that is another way that I use that tool, is just to time what I would just call even a squeeze, which obviously I really, really like. Okay, so a lot of cool things there. And although Boeing is just one example, there are many, many ways to use that tool, okay? The end goal, of course, of that tool is to focus on base hits, fewer losses and drawdowns, getting out of stalled trades sooner, okay? Using it to better time great setups like the squeeze, and then just playing the regular ebbs and flows during the chop times. And again, we haven't seen much chop in the last 3 weeks, although we are seeing a lot of chop in the bonds. If you're tired of this crazy moves, go to the bond market. It's very sleepy and very great for those ebbs and flows. And if you don't trade futures, you don't need to trade 10-year notes or 30-year bonds. You can trade TLT. You can trade the ETF itself or with options, okay? And then just rinse and repeat right there. So the ebbs and flows are nice, but the ebbs and flows are the smaller moves within the bigger thrust and reaction cycle. Okay, I'm going to say this again. The ebbs and flows are nice, but the ebbs and flows are the smaller moves within the bigger thrust and reaction cycle. It is typically the thrust and reaction cycle that causes the emotions, okay, which is like, oh my gosh, I'm going to buy here. You know, that's when the euphoria comes in. I'm brilliant. And then it's anxiety, denial, fear. Oh my gosh, as soon as it gets back up to break even, I'm getting out. Then it turns into depression, panic, capitulation, despondence and depression. And then, you know, it's just this whole thing. And you're either on the wrong side of the cycle all the time, which, by the way, if you are unconscious about this, you are on the wrong side of the cycle, because the market moves in a natural way that automatically tricks the human brain into doing the wrong thing at the wrong time, because it's all based on hope and euphoria and things. When things finally look good, it's the top, and when things look the worst, it's at the bottom, and you just want to be on the right side of that, right? So what is this whole thrust and reaction cycle, and how does it work? So you got to understand this flow. Now, again, what's interesting about this is if you look at a nice clean PowerPoint, it's like, oh, John, there's no way that anything looks this clean. You get the thrust up, you get a reaction. Typically, that's about a 50% retracement, or it could be a 618, or it could be a 382. Then you get the next thrust higher, and then you get the reaction. It's like, okay, well, this time it was a 382 instead of a 50% retracement, and then you get a thrust. And it's like, okay, in hindsight, it's like, okay, yeah, that looks fine, but that doesn't really, it's not really how stocks move, right? That's not really how they move. And then if you look at a bottom, you know, head and shoulders top, yeah, this is a great diagram. You know, okay, yeah, it's obvious now. Here's a left shoulder, and here's a head, and here's the right shoulder. And now that we're falling lower, that looks obvious. The key, though, is to understand these thrusts and resistance and looking at this in real time, okay? Now, if we go and we look at a stock right now and say Amazon, okay, if we look at Amazon here and say, well, okay, that's Amazon, and Amazon's cratered, but, you know, that does not look like that in any way, shape, or form, okay? And then my question to you is, really? Well, if we add those lines on here, boom, all of a sudden it's like, well, okay, yeah, we got a thrust, and we got a reaction, and we got a thrust, we got a reaction, which resulted in what? A higher low. We got a slightly higher high, slightly higher low, higher high, and then boom, what happened? We retested the lows. That's your first warning sign. And then we make, you know, boom, and then we puke. All right. Well, how close does that look to this? Well, believe it or not, it looks exactly like that. So that's the weird thing about this, is that when you're looking at a chart, you're like, oh my God, that's so ugly. There's no way. But if you're just looking at the lines, it's the same thing. So, I mean, if you look at this, you're like, okay, here's your, you know, here's the head. And it's like, okay, there it is right there. And here was the left shoulder, and there it is right there. And then here was this one, and there it is right there. And then there was this one here, and there it is right there. And then you've got the, you know, the lower lows. So obviously at this point, you know, you get the higher high, you're assuming that the reaction is going to hold. You get the higher high, you're assuming the reaction is going to hold. You get the higher high, you're assuming the reaction is going to roll. You get the higher high, you're assuming the reaction is going to hold, which would be about right here, and I'll show you why that it should be about right there. But this time it's different. It retests the lows. That is your first red flag that you have to be aware of, okay? And in this case, you get a lower high, and then that sets us up for the puke. Now, again, in hindsight, it's easy to see, right? But as it's unfolding, you just want to know that, look, if the pullback is about half of the prior one, that's a good thing. If the pullback goes all the way back, that is a huge red flag, and we got to understand what that means and how to read it. So how are these thrust and reaction measured? There's different ways to do it. It could be Fibonacci's is a common one, but there's actually a very simple way to do this. Remember, markets cycle on all time frames. A monthly chart is having its own unique cycle, as is a 60-minute chart, okay? And they all follow the same couple of rules, and that rule starts off, believe it or not, with the Bollinger Bands, which is what makes up the squeeze. So if we look at the spiders here, you'll notice what happens is that you get a thrust higher into a rising Bollinger Band, and then a reaction move into the rising midpoint, and then the next thrust higher into the rising Bollinger Band, and then the reaction into the midpoint. Now, in this case, we actually did flush down and test the lows. That becomes a shakeout period. You let it see which happens. Either what's going to happen here is that this fails and we make lower lows, or if it can take out the high, then we're back in business. In this case, it takes out the high, and guess what? Right, we retrace to the rising midpoint. Higher high, retrace to the rising midpoint. Higher high with the rising Bollinger Band, retrace to the rising midpoint. Higher high, and then crush. But what's interesting about this is that these Bollinger Bands essentially lay it out for you like a map, like this, okay? Now, that was a daily chart. Now, if you look at a 30-minute chart, it's the same thing on a downtrend. So here's a downtrend, hit the 30-minute lower bar, retrace to the midpoint, 30-minute lower band, retrace to the midpoint, 30-minute lower band, retrace to the midpoint, et cetera, et cetera. And guess what? You've got thrust, reaction, thrust, reaction, thrust, reaction, thrust, reaction, thrust, reaction, okay? Same damn thing, just a different time frame. So it's a slightly smaller scale, okay? Here's Home Depot on a daily chart, and I think this is fascinating here. You can see here, okay, great. You know, here's the thrust, you know, kind of a reaction, thrust. We're kind of, and this is what a sideways market looks like. A sideways market is testing the lower band and upper band and lower band and upper band and lower band, and then you get a squeeze, and in this case, it exploded higher, and then it's fallen apart. Well, even when it's falling apart like this, you actually still have ebbs and flows on the 30-minute chart. So you can see we came down to the lower band and then went back up to the upper band on a 30-minute chart. So again, this stuff happens on all time frames. And so the idea here then is like, okay, well, if there's daily Bollinger Bands that are, you know, impacting the daily cycle, and weekly Bollinger Bands that are impacting the weekly cycle, and the 30-minute Bollinger Bands that are impacting the 30-minute cycle, wouldn't it be great to look at a bunch of Bollinger Bands all on the same chart? And so the problem is, of course, that you have a chart that has all these lines on it, all these Bollinger Bands, and you can't see anything, and it doesn't make any sense. So that's a problem. So I just wanted to know, like, what's the current level where we are now, so I could get a sense of where we were and where we are in the thrust and reaction cycle within various time frames at a glance. Okay, so this is where this came in. And so now what I can do is, at a glance, I can sit there and go, okay, cool. Home Depot, I can see we slammed into the upper Bollinger Bands. Here's the weekly, here's the 4-day, here's the 3-day, the 2-day, and the daily. So we got this kind of zone there. And then we came all the way down through the midpoints, okay, and into the lower bands, and we started to bounce. Now within that, we can see here that we popped into the 30-minute, that 30-minute band, right? And we went all the way up to the upper 30-minute band. That's a tradable ebb and flow. You can see that 30 and 30. Now, on something like this, when we know we're in a big downtrend here, but we're getting a little bit of a bounce day, just think 30 and 30. You can buy that 30-minute lower, flip it out on the 30-minute upper. You're not betting that this whole thing is going to change. You just want to catch that little move from 191.20 to like 193.20. If you're trading options, that's buying options at 3 and selling them at 4. If you do 10 contracts, that's $1,000. All right, you can make a living doing that. So this is one that we did during our live trading day, and you can see here it took about an hour and a half. We bought our options at $3.65. We had a sell order at $4.80, and it hit it shortly thereafter. But again, you don't need to catch killer moves like that. That's a nice 30-minute ebb and flow, 10 contracts, a little over point, and it turned into a little bit over $1,000. Yeah, so Joe is saying, John, my biggest problem is exiting at the end of the reaction rather than at the end of the thrust. Okay, so good. We'll look at that too. So Here's another example, Walmart, and Walmart here has been what I call a little bit more normal. And you can see it's like, okay, we're trying to find its footing, and it popped up here and then kind of came back down and had to squeeze. And then you can see here on a 30-minute chart, guess what? Oh, we're popping up and we're coming back to what? The midpoint. If you got a strong uptrend, buying the midpoint on a 30-minute chart is one of the easiest ways to get in. But again, how many time frames do you want to look at here? Well, if we have this multi-snap tool, we can see again at a glance, because at a glance now you can tell exactly what's going on. We held the daily lower band. These aren't even in play. We held the day, and then when it slammed up here into the daily upper and the 2-day, guess what? There was some profit taking, because that's how the algos trade this stuff. So we just wanted to zoom in here and just catch a little bit of a move. And it's like, okay, great. We came down into the 30-minute lower, and now we're looking for a move into the 30-minute upper. And in this case, and possibly up to the 2-hour upper. I mean, it's kind of a range, right? So here we are at $95.83, right? So we can see that there's still plenty of room. And we come in here and say, okay, great. So in this case, and again, if you're more of an advanced options trader, we bought these $95 calls at $3.10. Here we are at $98.94. So we're up $1,500 in those calls. And we also did a more conservative put credit spread for 56 cents. And here it is almost worthless. So $470 there, good for $2,000. Again, that's just kind of an ebb, just catching that ebb and flow. We don't have to catch this huge move. We just want to be buying on the dip, selling up here, and then reloading. Okay, we're just trying to create income here. We're not trying to, we're not trying to be a hero. We're not trying to kind of time it. We're just we're just trying to like not think about it and catch the ebbs and flows. It's like, oh, we came back down to the midpoint here. Why don't we buy it? Because it's probably going to go back up to here. Right? It's like, it doesn't take a lot of thought. All right, so that was Walmart. And then another one here, this is, again, my favorite one, is that when you've got in this case, Apple, and of course it's the opposite in a downtrend. Here was Apple. It had this great move higher, and it hit the 30-minute upper band. Okay, so guess what? Here's a tip. If you're in a stock and it's closing near its highs of the day, okay, and it's closing into those 30 and 60-minute upper bands, you're like, man, I hope this thing gaps up tomorrow. More than likely, what's going to happen is that the algos are going to rip it down in the morning back to the midpoints. And again, you could hold through this. It's like a $3 move, right? It's not the end of the world. Or you could flip it out, take this profit, and reload there, okay? Because this happens all the time. And these adjust on a daily basis. In fact, they adjust the 30-minute ones adjust every 30 minutes, the hourlies every hour. Again, same thing. All we're doing here is we bought it at 219, flipping it out at 222.73. So we got these 10 call options here, got a call debit spread here, and again, we are just trying to catch some income here, just trying to catch these ebbs and flows. We're not trying to catch these big moves. Okay. Hey, look, don't get me wrong. If a stock goes from 210 to 230, that's great, but it's a lot easier to time these moves that go from 219 to 222, and they are lucrative, okay? Yeah, so now you can see on this, what I've done is I've kind of combined them. So the multi-snap is the Bollinger Bands, and then you can see they're also on here, and then the multi-range just shows you not only, so this is what's great, is that when the thrust and reactions move together with the ebbs and flows, so we came down into the reactions, which is the midpoints, and then we got those oversold readings, okay? That is, in a choppy kind of a move like that, that's gold in them dar hills. And of course, again, in terms of probabilities, that's what I like to look for there. And then just be patient and wait for that. If it's like, okay, I don't see that, then great, there's no trade. Does that make sense there? So that's what I like there, and then that's Apple. So what I want to show you this real quick, but I've got 8 other tools I want to show you guys. These are new tools. Most of you guys have them. If you don't have them and you want them, you can go to simplertrading.com/tools, okay, and then you can get those. So, and now we got 8 more indicators I want to show you to use here, but essentially how those work is that the multi-snap is 597, multi-range is 397. but you can get them both for $5.97 if you just go to simplertrading.com/tools. Okay, so that's that one. We'll come back to that because we've got, that's just, again, I just wanted to go over those last indicators that we just launched. So now let's go over the other ones. So we have a lot more to cover. So those are the newest tools that we just released. Again, most of you guys already have those. John, will you have a trader dedicated to this technique? I could do this all day long, every day. So just so you guys know, this is the strategy I'm teaching my kids. So my 8-year-old Dylan and my almost 11-year-old Avery, they like to trade NASDAQ futures in exchange for V-Bucks. And what I do is I let them trade one contract. They get 20% of the profits. And that's what they do. I just say, okay, you got to wait for this, wait for those levels, and then here's your, there's what you do. And that's what they do. Yeah, so let's do this, guys. I've got other things I want to cover. So we're just getting warmed up here, and then I'll explain for those of you that if you don't have the indicators, or if you would like to attend, we're going to do live trading with the indicators and stuff like that too. But let's keep going here. All right, so what about the other stuff? So let's dive in, because here are the other tools. And again, these are all older tools that we released. One of the, I think, common misperceptions, if that's the right word, is that when we do release a new tool, it's like, oh God, you don't even use the old ones anymore. And that's obvious. The furthest thing from the truth. It's how we combine them. Okay, so how do you combine these tools to work together? So let's start with 21 bar price channels. I love this, especially in conjunction with these tools. Okay, so the 21 bar price channels. So back in the 1980s and 1990s, there were a lot of systems that traded using 21 bar highs as buy signals and 21 bar lows as sell signals. The idea being that a new 21 bar high signifying to start the next leg higher. If you guys remember, it was the turtle traders and all that kind of stuff too. And a new 21 bar low signifying the start of a next move lower. Right? These can easily be viewed with a technical analysis tool known as the price channel, with the upper channel set at a trailing 21 period high and the lower channel set to a trailing 21 bar low. All right, and this is all that looks like. This is a tool that's available on any platform. And you can see here, it's like, okay, here's Amazon. Here's the 21 bar high. And when we break through that, you can see that we actually start a new thrust higher. All right, and then here's a new 21 bar high. Okay, and then at some point we get a retracement back to the trailing about 21 bar low, et cetera, et cetera. And so that's just something like, okay, it used to be a lot more effective, frankly, and the turtles used it in commodities, but then once the word got out, a lot of people use it, and so it's not as effective anymore. But I do want to know when it is happening. Okay, now good question, Don. So with all these indicators, does it lead to information overload? So it's a good question. I'm going to show you at the end of this how I have them all arranged as to prevent that, basically. So in this case, so now these are older charts of Amazon. Just so you guys know, I took these. This is a little bit older, so it's not as of what's happening right now, but we can certainly take a look at what's happening with Amazon right now. So in this case, when I was doing this, Amazon was on a strong uptrend. But what would happen is after each breakout to new 21-day highs, at some point the sellers come in. Okay, and again, just to emphasize here, at some point the sellers come in. So it's always exciting when we're making new highs, new highs, new highs, but at the end of the day, sellers come in, right? So usually it's longs who are getting nervous and they're just wanting to take profits, so they start selling. And this is ultimately a cascading effect depending on how nervous the stockholders are. And keep in mind what I said earlier about auto trailing stops, okay? This is something that a lot of brokers have as a feature and a lot of traders use. So auto trailing stops actually create a self-fulfilling prophecy of these ebbs and flows, and this 21-day high tool is one way to look at that. So what I want to look at here is I am interested in identifying the exact point when an uptrend that has hit a new 21 bar high. And again, if it's a daily chart, obviously that's 21 days. If it's an hourly chart, then it's a 21-hour high. If it's a 1-minute chart, it's a 21-minute high, literally. So I want to see that 21 bar high or low when that reverses into profit taking, because that tells us when those trailing stops are about to kick in, okay? And so when we look at this, then we just want to understand, it's like, okay, well, what does this mean? Well, sometimes when this happens, okay, so right here we got a, we got a high, and we didn't really sell off, we traded sideways, but here at some point we actually had a pretty significant pullback. So I want to know the moment in time when this gets confirmed, okay? That's what I'm interested in. And I don't want to stare at a chart. I want to count 21 bars. I just want to see that. Yeah, no, Steven's just asking, hey, why? So this just the indicators. So the indicators and the Saturday class and the 3 days of live trading was the 997, just the indicators by themselves without 3 days of live trading and without all the instruction. Does that make sense? So it's just the indicators. So now what you can see here is what this tool is right here. Okay. So in this case, yeah, no worries. So now what you're going to see on some of my charts are just these arrows. Okay. So what I want to see is like, okay, we've made a new 21 bar high. Now we've taken out the low of the high bar. Okay. I want to know that. Okay. Or we've made a new 21 bar low and we've taken out the high of that. I want to know that. Okay. So that's what the arrows are. And so probably one of the biggest questions I get on my charts are, what are those arrows? Well, these arrows, that's what this represents. So this arrow represents the moment in time that we got a 21 bar high and we took out the low of that high bar. Okay, that signals a trend reversal. Now you can see here we got a trend reversal, but we did not make a new 21 bar low. That's okay. I'm just interested in the reversals that are 21 bars. So now we got a new 21 bar high. All right, here's the high bar, the low of the high bar. When we break that, typically you're going to get a rush of selling with what? The auto trailing stops. And oftentimes that can take you down to the 21 bar low. So now, boom, we're making new lows, and then we get a break above the high of the low bar. That's going to signal, again, if you're short, auto trailing stops. So what I love this is it really tells you when the auto trailing stops are kicking in, and it's a great way to kind of catch and time those ebbs and flows. All right. So what those arrows do, now what I've done is that these price channels, the price channels here represent, this represents the 21 bar high, this represents the trailing 21 bar low. Okay, so you can see here now it's like, oh, we just made a new 21 bar low, low, and then when you break that, you get the arrow. So on my charts, when you see the arrow, because I don't look at all this, the arrow just says, oh, great, we got a break, we just got a reversal here, a break of the high of the low 21 bar move right there. And what that does, again, is it signals auto trailing stops. So everybody that was trailing stops here on the short side, they just get sucked up. So it's a very real, legitimate move in the markets, and we just want to understand when it is setting up. Okay, so interesting, right? And so while those three tools together, they give us a lot of information, I'm going to continue going through the ones that I like to look at. So one of my favorite things is just the overall trend of a chart. So there's a lot of emphasis on studying price action on each bar. In reality, I think that's a waste of time. I think the price action on one bar can be completely random. Someone could get stopped out of a large position, someone makes a trading error, someone gets scared out of a trade. That can all happen on one bar. So to me, one bar is actually not that important. Maybe on a daily chart, but on a 30-minute chart or a 5-minute chart, certainly not. But over a period of 6 bars, you can measure who is in control. And at the end of the day, that's all that matters. Are buyers in control on this time frame, or are sellers in control on this time frame? That's what we want to know. All right. So if bulls are in control, then don't worry about this 1 bar down. Or if bears are in control, then don't worry if it has a little 1 or 2 bar spike up. So how do we measure that? So this is a 30-minute chart of the S&P 500, and you can see if you're just looking at regular candles here, it's like, okay, well, it gives you some information, but it's like, well, it's pulling back here. Is that dangerous? Or, that's bullish, but then here's some bullish candles, but then it pukes. And then what's going on here? And so I would just argue that the single candle is kind of like confusing and it doesn't give you a lot of information. However, if you turn this over to the TTM trend, then what it does is it tells you, okay, if this is a blue bar, it just means that bulls are in control. Blue bar, bulls are in control. Bulls are in control. And then when it switches the red, bears are in control. Okay, so all through here, it's like, okay, bears are in control, and then bulls are in control. Now, keep in mind, all this here, in hindsight, that's pretty obvious. But if you come here and it's like, okay, if you're long here and it's like, oh my God, look at this nasty bearish candle. Look at this bearish candle. Oh my gosh, look at this bearish candle. I need to get out of this trade when in fact it explodes higher. However, if you've got something like this tool on the TTM trend, it's like, look, bulls are in control, chill out. That's what I want to know. Okay, so essentially how this works is if there's blue bars, bulls are in control. If there's red bars, bears are in control. Okay, the key again is not to fight this. Don't buy the dip if the bars are red because bears are in control, and don't get nervous and bail out if the bars are blue because the bulls are in control. Okay, so this is a chart of Tesla. Great volatile move here, and you can see it's like, man, if bears are in control, don't fight it, and if bulls are in control, don't short it. All right, keeps your life pretty easy. So the key with this then, and by the way, if you have Thinkorswim, that's a study that's already in there. You can just go to John Carter's studies, TTM trend, it's already there. But the key with this is that, as you guys can imagine, is that I like multiple time frames. I want to know what's happening on multiple time frames. And I think this is kind of the secret to trading is essentially being able to systematically discern what is happening on multiple time frames without taxing your bandwidth too much. And that means you need to have what I just call bright, shiny visuals that tell you instantly what's going on. Okay, so if we look at this, then what I want to do is just say, okay, great. So if we were going to look at multiple time frames, it would look like this and say, okay, gosh, on a daily chart where bulls are in control, and on a 4-hour chart, bulls are in control right now, and on a 2-hour chart, they're in control. But again, if you start looking at that stuff, by 10 o'clock Central, your mind's done making decisions. And as we've already talked about, when your mind hits decision overload, you stop making good trading decisions. And so you want to avoid that. You just want to make things pretty easy. You want to make things very visual. Okay, so boom. So this is the MTF trend. And so what this is telling us is just saying like, okay, look, in this case, here's an hourly chart. And if you want to look at the 2-hour chart and the 4-hour chart and the daily chart and the 2-day chart on here too, great. The hourly chart is bearish, it's red. And in this case, by the way, red, of course, is bearish, and instead of blue, we use green just because it's easier, and that's bullish. So, wow, the hourly chart, which is the bottom one, is bearish, and then the 2-hour chart is bearish, and the 4-hour chart is bearish, and the daily chart is bearish, and the 2-day chart is bearish, and you can program these to whatever you want. Then guess what? Then when you see the dot up here, it means all time frames that you're referencing are bearish. Guess what? You don't fight that. You are going with that. That's showing you that there is gasoline on the fire to the downside. You can actually watch it even turn to that. So here it's bullish, 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 bearish. And as you can see, the lower time frames turn bearish first, and then the next one. So you can see it unfolding. And then if we go here to a bullish, so same thing, bullish, here's the S&Ps. And it's like, okay, in this case, it's like, bullish, 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 and there you go. So what's happening here is that now you can see at a glance, if all 5 time frames are in alignment, great. You're either holding on to your winners, holding on to your longs, you're buying the dip, et cetera, et cetera. So now you can look at this and say, okay, great. I've got, we've talked about a couple of things, but here's a squeeze, and we've got all time frames in alignment, right? Oh, we got a little arrow here, but guess what? That mid band is holding up just fine. Oh, we got another arrow, but that mid band is holding up just fine. So now you can kind of see how all those flow together. So yeah, Joe, and just asking, do you leave the TTM trend at the default? Believe it or not, with all the indicators, I just leave them at the default. So I have back in way back when, I used to spend a lot of time. So before I had kids, really, and if my wife was working and she'd travel, I'd spend all weekend. If I wasn't playing Half-Life or Call of Duty, I was tweaking the settings on my indicators. And what I just found is that the tweaking actually didn't really help much. The indicators were fine at the default. It was more just learning how to read them and how to use them and how to get in sync with them. Okay. Okay. So again, I'm just going to introduce you to a couple more concepts, and then I'm going to show you how all this all ties together. So as you guys know, I love me some squeezes. So on a squeeze, this is a weekly chart here of Walmart and a daily chart of Walmart. You can see the squeeze here, and we got a price explosion, and we got another squeeze here and a price explosion. On a weekly chart, a squeeze only happens about one time per year, maybe sometimes twice. So I want to know when it's setting up, because that can turn into a once in a lifetime trade or at least a once in a year trade. So I want to know about that. And then recently, of course, we had one on a daily chart. And so again, the question is, well, I just want to know when there's a squeeze because I like squeezes. So a tool that we have, which is the multi-squeeze tool, essentially, you can sit there and, again, I never look at 1 minute charts in terms of price action, but I will set up a 1 minute chart so I can see squeezes on all 18 of the key time frames from the monthly chart, the weekly chart, the 4-day chart, all the way down to the 1 minute. This is a current chart of TLT, which represents the bond market. Right now, there is a monthly squeeze. Guess what? Monthly squeezes only happen one time every 4 to 5 years. There is, the technical term for this is a BAM, that's big ass move, setting up on the bond market because there is a freaking monthly squeeze on that. Those are huge. There's also a 4-hour squeeze, a 60-minute squeeze, all these nice little ones. So these squeezes, when they fire, last about 8 to 10 bars. This means that when the monthly one fires, you're talking about an 8 to 10 month move. If the hourly one fires, you're talking about an 8 to 10 hour move, right? My favorite indicator is the squeeze, and that is the tool that allows me to see at a glance how many time frames or on what time frames there is a squeeze. Okay. The other one that I like in terms of a multi-time frame, and again, I use this on the 1 minute chart, is the multi-EMA cross tool. Okay. There's a very specifically 521. Okay. The 5-period moving average focuses on day traders, and then the 21-period moving average focuses on swing traders. So if the markets are all positive and going strong, essentially the 5-period moving average acts as support. And if the market, from a day trading perspective, on a swing trading perspective, then the 21-period moving average is acting as support. If at some point the 5 crosses the 21, that designates a change in trend between the day traders and the swing traders. Okay, so if it's red up here, that just means that the 5 is crossed, or the 5 is below the 21. Okay, you can see on the NASDAQ futures, we have a 521 EMA cross on all time frames. You cannot get much more of a, except the monthly, but you can't get much more of a downtrend than that. Okay, much more of a downtrend than that. Yeah, and if we come back here and we look at the at TLT, so on TLT, you can see that what's interesting here is we are in a longer term downtrend. Okay, the monthly, weekly, daily, and again, you can see this at a glance, which is great. You don't need to spend all weekend researching this. We're in a downtrend on TLT. I don't have to look at a chart to know that, but we're having a little short-term pop. Ultimately, what I'd be looking for is that this monthly chart fires to the downside in alignment with the current trend, which means what? Interest rates are going to go higher. Okay, so it's great because you can see that at a glance. You don't even have to look at the chart, which is fantastic. Okay, next is the 10x bars. So what the 10x bars do is measure, because we've talked about ebbs and flows, right? You ebb and you flow, and then you thrust and react. What the 10x bars do is measure the velocity, ferocity, and conviction of that move. Okay, so if they're yellow, it just means, ho-hum. All right, we came up here and now we're going to drift back down. It's yellow. There's just no conviction. It's just happening. It's like it's happening just because it has to happen. However, if that changes to red, now that it means the momentum has turned negative, okay? And if there's dots, it means there's volume that is 50% above normal. When you see red with dots, you never, ever, ever fight that. Okay, if you're wondering when do you buy the dip, you do not buy the dip in this situation. You will kill yourself doing that. If you want to go with it, that's fine. It's like, well, I'm just going to short this. Great. You short it here. Short it anywhere where it's ready. Yeah, at some point it's going to turn, but at least you're on the right side of that. And then guess what? If you're short, when you see it turn back to yellow or green, then get out of your short. This measures the momentum and conviction of the move. These thrusts and ebbs and cycles, some of them are going to be nice and slow. Some of them are going to be really fast. And the 10x bars tell you what's going on there. Okay, obviously, believe it or not, when you get the yellow moves, those are the easiest. They're boring. When you get red, you're going to get that faster move to the downside. Typically in a reactive mode, you're not going to get those red bars on a daily chart, and so on and so on. Okay, so again, super helpful, right? So always in flow. So with this workspace, I can see what is going on, whether it is a quiet ebb and flow, a larger thrust, a building up of the squeezes on any time frame, the trend across multiple time frames, all at a glance. So this is kind of how it looks like and how it looks like all together. So you can see up here in the upper left now, it's like, okay, now somebody asked earlier, gosh, is this analysis paralysis? I mean, what are you going to do? I think this actually prevents analysis paralysis because I can look instantly and know, do I need to be doing something or not? So here's Netflix. So one tool up here I haven't talked about, see that purple little hats there? Those are called top hats. And what that does is measures it tells you this move has gotten so extreme that now the hedge funds are just going to start shorting this stock. Okay. This move has gotten so extreme to the upside, they're just going to start shorting it. And that indeed marked the all-time high for Netflix back in June. Okay, so when that happens, you just got to take profits. That does not happen very much. Now, these things here are called profit zones. And what they do is they actually mathematically look at the stock history in relationship to its 21 period moving average and say, okay, based on this stock and based on this history, if this thing, remember when I started talking about reversions to the mean, so you're either reverting to the mean or you're launching away from the mean, it measures precisely by each stock where the move tends to terminate. So the profit zone for Netflix is different than TLT, which is different than Walmart on a percentage basis, and this measures this mathematically, okay, which is great. And of course, here's the squeeze. Here's the RAF, which I use with the squeeze. All right, so this is pretty easy. This is my swing trading chart, and I'm essentially looking for squeezes. And then I can come down here and just say, okay, now on Netflix here, how are the moving average crossovers? Well, they're pretty negative. I can see that at a glance. I don't need to look at a weekly chart or anything like that. I can see. And then are there any squeezes? Oh, interesting. There's a 4-day and a 3-day squeeze. I may want to take a look at that because Netflix may be about to puke even lower. Okay. And then if for some reason I wanted to day trade Netflix on my 1-minute chart, I can say, okay, gosh, here's Netflix at $310. It's got green bars with dots. I think I'm going to buy some calls here. Man, this thing went up $10. Well, guess what? As long as it's green with dots, you hold on for the ride, and as soon as it turns colors, you get the hell out. All right, so it's a great way to kind of catch those micro trades. And then of course over here we've got the multi MTF tool. Oh my gosh, here's Netflix. Man, I'm not gonna buy this because it's selling, and then here's the thrust tools and this. So that makes sense, and I just kind of look at them all together like that, and it just kind of makes to me makes everything kind of easy. Okay, so let's look at some live markets. I just want to show you this real quick for those, again, most of you I know already have these, but for those of you that don't, I just wanted to show you, them so you could say, oh, I didn't even know you guys had these. So if you go to, let me reload this here. So if you go to simplertrading.com/tools, all right, and so what you can do here is just say, okay, well, the first two tools I talked about, which is our newest ones, you can see right here that it is the multi-snap tool and then the multi-range tool, okay? And those are listed now in our store, $597 for the multi-range tool and $397 for the multi-snap tool. You can get them today or tonight if you're seeing this for $597, okay? Now, for those of you that just took the class, this is just for the tools. It doesn't include 3 days of live trading. It doesn't include the instruction that we had on Saturday. It's just the tools. So again, if you want these tools, I think they're fantastic. Again, this one's $597. This one's $397. This is an opportunity to get both of them for $597. And then we will do like a half day of live trading, so you can just kind of get a sense of, hey, here's a couple hours and here's how they look. Now, if you're newer and you've never seen any other tools, I just wanted to show you that we've never done this before with a bundle. So you can go here and just say, oh gosh, here's that multi-snap tool, here's that multi-range tool, and then and there's 2 half-day live trading sessions. Again, each one's about 2.5 hours, just so you can make sure you know how to use it. Then there's the 10x bars, that was measuring the momentum. There's the top hat, literally it's like the all-time highs are marked essentially. Of course, you get the squeeze, ready, fire, aim, profit zones, that multiple time frame plus the arrows, multi-EMA, multi-squeeze. So on our store, those are all almost $6,000. And you can get them for $29.97. Again, most of you guys already have all this. We just want to put this together for those of you that are newer and like, you know, if you haven't seen this stuff and it's like, oh my gosh, that is the best stuff since sliced bread, which it is, there's your opportunity to get it. All right. So now I'll just answer questions. We can look at live markets and all that kind of stuff too. I did want to say that if you, let's see. That shows all that. If you already have some of these, okay, you can buy these a la carte. And if you already have some but not all, the best thing to do, because if you call, it's going to take forever. But if you email us and just say, you know what, I've already got some of these. These are the ones I'd like to get. Then you can get a customized package at the discounted rate. All right. So anyway, that's all that. I just want to, again, for those, most of you guys already have this stuff. And all that kind of stuff too. And also too, if you've got all the indicators, you're interested in the live trading, just email and they'll get that set up too. Okay, so let's dive into questions and see what kind of questions and stuff that you guys have. Oh, how the top hat works. Okay, so let me bring that one up. So the top hat one is pretty interesting. Now you can use it on, now some people I know actually use it on smaller time frames, like 30-minute charts and things like that too. You'll notice that we actually have some bottom hats. So I call it top hats because a lot of the times we're looking for tops. But it also works on the downside too. So if we look at the NASDAQ right now, and of course the NASDAQ is set up to take another drubbing tomorrow. Did we get, I thought we had some bottom hats that hit here. Maybe it was in the S&Ps. Let's take a look there. I thought one of the indexes put in some bottom hats like today or possibly yesterday. Oh yeah, and by the way, I was going to give you guys a copy of this grid too. So once you guys get the tools and stuff like that. Okay, look at this. So in the S&Ps here, we're actually getting bottom hatch, which means we're reaching such extreme. So we got that one, and you can see that from there, we got a pretty big bounce. Okay, now it didn't last, but it's kind of like that's as far as it could go. And you can see we got one of these yesterday as well. So when you see that, if you're short, just beware. It's like, man, this thing is gonna rout, right? Now you can see on the S&Ps here tonight, yeah, we're down 12 points, but guess what? Where are we stopping? We're stopping at that 30-minute lower band, and we're probably going to rally back up to here. Okay, I'm not going to trade that right now because after this, I'm going to go, I'm going to drive home. But again, it works on all time frames like that. Yeah, and if you have all the tools and want a copy of the grid, again, just send us an email, and it'll take it. We'll get that kind of teed up, and so you can look at it. And then, of course, on the S&Ps here, you can see that we've got, moving averages here, all down, and then no squeezes setting up. Okay, and you can see from a momentum perspective after hours, when things kind of puked there as well. Yeah, actually, let's look at Amazon here because Amazon, of course, is in the news. We've got a big gap down, something about tomorrow. It was like a $120 move up today, and then like a $120 move down after hours. A pretty crazy move here in Amazon. Now notice here, recently in Amazon, okay, we were talking about that head and shoulders top. Believe it or not, it is no surprise that that shoulder, that head, actually had top hats as well. So typically when you see this, you are actually looking for a potential head and shoulders top. Now we had one here, and it was a head and shoulders top that actually ended up failing because the Amazon was just so strong. But typically when you see these top hats, it's actually the sign of a head and shoulders top being formed as well, okay? Here you can see that there was a 21 bar low. So we got a rally, 21 bar low today. We got a rally today, and of course tomorrow it's gonna be down quite a bit. And you can see even if you're day trading it here from 1760 to 1790, you had clear momentum. So again, the path of least resistance. And of course today when we're trading it, 30-minute lower band up to the 30-minute upper, and then it terminated there. We were looking at TLT earlier, or Walmart. So Walmart's what I would call a little bit more of a normal stock. You know, it's kind of behaving normally. So how do you do that? Well, keep in mind here that Walmart's a very strong company, but when it got these top hats, it's like, man, it's got to catch its breath. It's got to work that off. So we're trading sideways. We finally build up a squeeze. And again, not a fantastic move, but it's a very, very tradable move, okay? And then if you look at other markets like crude oil, and if you don't trade futures, that's okay, because if you look at crude oil, you could of course trade like stocks like EOG, et cetera, et cetera. But what's nice here is on oil, if you're looking at like, gosh, how do I trade this and what do I do? Well, guess what? You got to move here from a squeeze, okay? This is a beautiful trade, and we participated in this. This is about as picture perfect as you can get with this stuff. You got to squeeze, you get in near the mean, the 10x bars turn green, you just hold on, you get into these upper profit zones, you start taking it off, and then you see that arrow, that red arrow was the death knell of it. 21, a break of the low, the 21 bar high, and since then we've been puking ever since. It is a perfect combination of how to use those tools. And now we can see, okay, great. Gosh, there's a squeeze on the weekly chart and the 4-day chart setting up. I don't want to miss that. And we've got some smaller squeezes setting up as well. We are hitting the 30-minute lower band here, okay, and we are oversold. Why did I select the 5 and 21? So on the charts, what's ironic is I like to use the 8 and the 21. But I just found that in terms of measuring the cross, it was a little too slow. I want to know when that 5 crosses the 21, it's kind of the beginning of the end. And so that's why I use it, just because it's faster. How is the red arrow different than the RAF? So great question. So if you look at, now there are going to be times when they line up. So here you got an RAF sell, and here you got the 21 bar sell. So when they line up, it just makes it that much more powerful. Okay, now there's gonna be times, and here's an RAF buy, and you got the 21 bar high buy here. Okay, so great, and when that lines up, it's great because it's just powerful. But sometimes what'll happen, and if we look here at, I think it was Walmart. I'm trying to think of the last one I was looking at here. Walmart here. So sometimes here, you know, and when a stock is trading in a narrow range like this, you kind of get some weird signals because it's just back and forth, back and forth. But here we got an RAF buy, okay, but there was no buy there, right? So they are totally different logic. Sometimes they're aligned, okay, and sometimes they're not. But what's nice when they are is they're just totally, completely different logic. Does that make sense? But when they line up, that's great. Let's see here. Great. Oh, how are the arrows different than the scalper alert? Okay, so the scalper alert, it's going to happen anytime there's a break above the high of the low bar. Okay, anytime. These have to happen. You have to have a 21 bar high or low first. Okay, so the scalpers, you may get, in this case, you may get a scalper here and a scalper here and a scalper here, because it's anytime there's a break above the high or the low bar. Whereas this one is saying, you know what? We don't need to know every time that happens. We just need to know when it happens after a new 21 bar high or a new 21 bar low. So now what happens is you get much more selective signals, if that makes sense. What was one? Oh, Tesla. So Tesla was one we were recently looking at too. And Tesla, because it's been so volatile, it's, you know, it's not like there's a lot of squeezes on it, but man, those 21 bar highs and lows have been really, really solid. So if you look at this, it's like, oh man, okay, so here was the sell signal, great. So if you wanted to buy it, what's great about this is that you get the arrow here, so you could buy it here. You just put a stop at that low, all right? So here you lose like $3, okay? And like you try it again, and you put a stop at the low and you lose like $3. You try it again, you put the stop at the low. You don't get a sell signal till up at 314. So that was a $55 move. So the nice thing about this is that, you know, you can pin, yeah, you lose $3, but you can catch some pretty darn big moves with those as well on those crazy ones. I noticed that you're using the multi-stack or using the multi-RSI. So yes, so what I do, and it's hard to see it on that chart, but I'll also give you guys a copy of this too if you have if you want the indicators. If you look at this, what I do is also I add, or actually, you know, it's hard to see on this chart, but I kind of combine these together. But you see I have the RSI as well. But let me get the white chart because the white one is a little easier to see here. And yeah, so you can see it's like, okay, you know, here's Tesla, and now I can see what is the RSI doing, you know, what's the stochastic, and I'm not too interested on like the 15-minute and the 10 and the 5. It's really like 30-minute on up is what I'm interested in. I'm interested in those bigger ebbs and flows, not necessarily those kind of 1-minute flows too. Okay. Yeah, so question is on the training. So what we're going to be doing on this is that we'll be doing kind of 2 sessions, and they'll be about 2 to 3 hours each. But I like to do it during the live markets just to show you kind of how they work. And then if you guys need more documentation on these, like, okay, gosh, that top hat looks cool, but I don't understand it. We've got documentation for all of it. So that's all stuff that we can, you know, get to you as well. Yeah, Mark, I think what we're doing, and they're flexible, I think this one is an AM session, and then I think this one is a PM session. So essentially it's a trade the open, you know, for 2.5, 3 hours, and then you guys can think on it. And then the next week we'll get together again, we'll trade the close. And then I just hang around, especially too, you know, we just can, you know, answer questions. I just like to show things, how they unfold in real time. Plus it gives you a chance to use these and then come to me with questions. Will you be training on these in San Francisco? Yes, I'll show some of these in San Francisco. So for those of you that are going to the live event in San Francisco, which I'm going to be flying out for on Sunday, yeah, I'm going to be using that grid, and we're just going to see what happens. You know, I always say, like, what's nice about that grid is that it adapts to any market condition. If the markets are quiet, boom, we're going to be doing some ebbing and flowing and thrust and reaction. If the markets are going nuts, we're going to be looking at those 10x bars, right? So it's kind of like whatever the market throws at us, those tools will answer the question for us of what to do. Mabel, if you have all the indicators already, can you join the live trading? So what you want to do there is just send us an email, and and I know that the email is on here somewhere. Yes. So in that case, again, just send us an email. I know we've got a kind of a list of different scenarios because this is a unique thing. You know, unless you if this is your first webinar ever with us, then you may not have these tools, and all of a sudden it's like, okay, yeah, I'd like to take advantage of that big package. But most of you guys have been with us for a while, so it's like, okay, I want those new ones. Those look great. Okay, now that I understand them, cool. And I've got most of them. So any of those situations, just email support, and we'll start cranking through that and making sure all your questions are answered and all your needs are met there. How often do you use the top hat? So I have them on the chart all the time. What's interesting with the top hats is that it's just when they show up. You know, on a daily chart here on Netflix, the last time they were on Netflix was way back here in June. So they haven't even shown up since then. So they're a rare sighting. It's like Bigfoot, but when they happen, gosh, I really want to pay attention to what's going on there. And again, I'll show you the logic behind them, but it represents such an extreme move that it's stretched to all. It's really hard for it to do much after that. It's just like, okay, it's got to catch its breath, and that's just a signal that that's what's happening there. So the haystack method is for a quiet market, and the pinpoint for the current. Well, okay, that's a good question. So you can drill down on the haystack and use them on a smaller time frame as well. But I would say that haystack is kind of for telling you when a trend is potentially ending for good because it's gotten so extreme. And then the multi-snap tools, believe it or not, I mean, even though these markets have been crazy, the multi-snap tools were built for more quiet markets, just because they time the ebbs and flows so well, but they work just fine in the crazy environment that we're having right now as well. If we come back here and we go back to TLT and just kind of say, or 30-year bonds, if you guys trade futures, you can use these on currencies as well. You can just kind of see it's like, okay, gosh, we're just kind of hanging out here with TLT. It's really not doing too much. Now, we did get some bottom hats here. Remember the bottom, in this case, it's so extreme, it's gonna be hard for it to go much lower than that for a while. But here you can see, gosh, it's pretty easy ebbs and flows. Here we're overbought, so great. Here we're oversold, so let's buy it. Here we're overbought, so let's sell it. Here we're oversold, let's buy it. That's this ebbing and flowing all day long. And this stuff, it does not appear after the fact. This is real time. You can see right now, that's real time. It's not appearing after the fact, after it's already moved and looked good. That's what I love about this stuff, is it happens real time, so you can make a decision in real time and not something that confirms, way after the fact. All right. What is the multi-EMA? So the multi-EMA is measuring, literally showing you right here. So it's just saying, okay, this is, and you can change this, by the way. I look at the 5 and the 21, and it's just saying if it's green, it's just telling me that on a 1-minute chart, the 5-period moving average is above the 21, which means on a 1-minute chart, you're trending higher. However, you can see on the 3-minute chart through the 30-minute chart, the 21 is essentially above the 5, which means on those time frames it's trending lower. So at a glance, it just I like moving average crossovers, but I don't necessarily want to stare at a chart. So that shows me in real time what the moving average crossover story is on whatever stock I'm looking at across 18 different time frames at a glance. So the hope and lope, that was one that I've got a couple of slides in that at the beginning of the presentation, but that's what those arrows are. To me, they're very, very important. Essentially, it's saying like, hey, we've met 2 things have happened here. 1, we've got a new 21 bar high. 2, we've broken below the high of the low bar after making that 21 bar high. That frequently results in a pretty steep reaction move, time frame dependent. All right. Okay, Dean, awesome question. So John, I'm a believer, but why don't the traders in the live room use most of these indicators? A lot use the squeeze and RAF, but no one is using the multi-tools. I don't even see you using them. Okay, so it's a great question and very fair. So the first part of this is that, like when I'm trading, I'm looking at 6 monitors. So a lot of the stuff is off to the side. I've got to figure out if I'm talking about something, I can only share 1 monitor. I've actually never tried to share all 6 monitors at once. So I'm constantly dragging things back and forth. So part of why I actually built this grid was to answer that question, like, where are the damn indicators that you were using 3 months ago? And this way I can actually drag all this into one screen so you guys can see it. Does that make sense? So, a lot of times what I'll do is I might be looking at a simple chart with a squeeze and maybe some moving averages, but then off to the right, I've got all this other stuff, and off to the left, I've got all this other stuff, and this is the way I can kind of combine it into one. Will this bog down toss? So good question. So what I've found is that there are some of these things that are a little bit more resource heavy. So what I try to do is, for example, on this, I just kind of have one of these set up. I don't have like 10 of these charts. And so I will just cycle through and say, okay, now what's happening on the spiders? Okay. So I would like to have, say, 20 of these charts so I could look at multiple different ones, but I did find that does bog it down a little bit. So I'm just gonna have to look at one and just say, all right, whichever one what I'm interested in. And of course I can link this, if I'm flipping through a watch list or anything like that. So different things like that. Tanya, I'm a scalper. Does the multi-tool work well on scalps? So So this was actually built for scalps. I would say for now, I tend to look at this on 30 minutes and higher, just because when I get into a trade, I typically want to be into it for at least a couple of hours. But you could also drill down to this and do like the 10-minute and the 15-minute, or the 1 minute and the 5 minute. If you're saying, like, so it depends how you define scalping. If a scalping is like, well, I just want to be in it for a few minutes, totally yes. And all you got to do is drill down and set them up for like 5-minute charts and 10-minute charts. I just don't do it because it's just a lot of work. Like I've got a lot of things going on. So when I find a setup, I generally want to try to be in it for a couple of hours to a couple of days. But otherwise, yeah, you just drill down to a smaller time. Okay, minutes. Yeah, so 5-minute charts, 2-minute charts, et cetera, et cetera. Yeah, for sure. Absolutely. Yeah, no, and that makes sense too, because it's like I found that too, is people saying like, you know what, I like these indicators. It's hard to, how do I see all of them and how do I do all of them? And then that grid is just kind of a way to do that. All right. And yeah, I saw a question here. Okay, so here's the different thing. So again, if you are, if you didn't get the multi-snap and the multi-range tools last time around, I highly recommend them. I think they're a game changer. Again, $597 for the multi-range, $397 for multi-snap. If you're seeing this, you can get them both for $597, and that does include two couple-hour live trading sessions, so you can see them in action. And then from there, if you're just newer to us, and you're like, wow, I didn't even know all these indicators existed, and I know most of you've already got them, we just put this together and say, look, all those indicators are like $6,000, so if you want a deal, it's $29.97. It can get you set up, and we'll get you up to speed on them. But I think it's one of those things that, again, I always think like, God, what if, when I first started trading, what tools do I wish I have? Well, that's what these are. They answer every possible question, every possible scenario of what's going on in the market right now, whether it's the ebb and flows, okay, whether it's the momentum, whether it's seeing extreme moves that mark a potential top. Okay, the squeeze, of course, is my favorite. Timing squeezes and the bigger ebbs and flows there. Where the hell do I get out? Okay, that's the biggest question I get. Where do I get out? Where's a high probability place to get profits? This is exactly why that was created. That multiple time frame tool with the arrows, hope and lope indicator. And then, of course, the multi-EMA and the multi-cross have made my life way, way easier. Okay. Yeah, so Simpler Edge, that is a tool. And by the way, I think I told you guys this. That is a tool where we've been working with a firm that provides institutional data to hedge funds. And we've just been bugging them, going like, why can't retail traders see this? And so they have agreed to roll that out. They said, well, 14-day trial is enough. We don't even give institutions a trial. I'm like, well, look, this is different. So they did agree that we can extend the trial to 30 days. So I think that's awesome. And then they're actually continuing to add more stuff. For example, real-time short interest, just a bunch of real-time data that's just you can't see on a chart. And then we're going to get the head of research on that firm to do some free webinars for us as well. So anyway, that's all happening over the next couple of weeks. Gary, just got the pinpoint bundle. Have been watching you use it. I'm excited to do it. No, Gary, look, I'm really glad. I just think that I know this sounds, probably sounds self-serving, but there's no reason for us to put out tools that aren't going to help people or that we're not even going to use. So obviously you've seen me using them. I think they are something in terms of, the way that the natural psychology works in the human brain and how it screws people up. I believe that these combat that naturally. Instead of getting in at the highs and then getting stopped out on a natural pullback, you can actually see clearly what's happening on a chart and actually time it much, much better. And I think that's the name of the game here. Sweet, yes. Great question, Mark. To me, it looks like you could find a viable trade every moment of every day. How do you narrow down what to trade? Okay, so that's a great question. So the first thing I do is I don't take any signals on charts that are less than 30 minutes. So by simply not really looking at 1 minute chart or taking signals off of 1 minute charts and 5 minute charts, that helps a lot. So that's the first thing. And again, that's just my preference. If you're a scalper, then those are the charts you're going to live in, right? And then I just have a list, and we'll talk about this during the live trading, but it's like, look, the first thing I'm looking for is squeezes. I love daily squeezes. I want to be in a trade that lasts a couple of days to a couple of weeks. I don't have to think about very much. So that's my first choice. Now, we all know that the markets don't just, it's not Goldilocks and the three bears all the time. There's always going to be a lot of crazy things that are happening. So these other tools say, if I get into the squeeze, I got to like, okay, well, when do I get in? I see the red dots. When do I get in? So some of the tools help with that. The next thing is, when do I get out? And I want to get out in a way where I'm maximizing my profit. I'm not eating like a bird and crapping like an elephant. I'm getting out at the right time. Okay, so some of the indicators are for that. I want to know if there's been a major cycle high put in. So the top hats are for that. And so the list just kind of goes on. And at first it seems daunting, but if you're pretty clear on what your trading plan is, which I'm happy to share, then it's just kind of like you're looking for a couple of things, but at the same time, you're then fully understanding what's going on at all times. So it's just like, okay, I know what's going on. I'm standing aside until I see my setup. Yes. So, oh, by the way, if you keep scrolling down here, so you can see here, it's like, okay, what are these things? Well, here's the 10x bars, right? And you can get these individually too. I mean, you save a ton of money getting them as a bundle, but we're also having a discount too if you just want to get them a la carte. Here's the top hat indicator right there. And then you can scroll down and say, okay, well, what's the squeeze? Well, there's a squeeze right there. What's the ready, aim, fire? There's that one. Where is the profit zones indicator? I love this one. This has saved us so much money, because sometimes you get into a trade and you're like, man, I'm just going to keep holding on this forever. But why not just get out at the highest probability target? You know what? That one's had a huge impact just on my exits. Because I'm fine riding a winning horse, but what would happen is I would ride that winning horse too long. It's like, oh man, I ran it into the ground when I could have just got out there. So that one's been huge. Of course, this is the MTF. So the MTF and the Holp and Lope are actually a package deal, just to make that easier. So that's the one where you can see all 5 time frames, and then there's the arrows. Highly, highly, highly recommend those. And then if you scroll down, these have been some of my favorite ones, where you just I can at a glance, I can say like, okay, what are the EMA crosses at a glance, and what are the squeezes at a glance? Okay, it's like, okay, cool, now I got that. And then again, it's a $6,000 worth of indicators that you can get for $29.97 if you're just. And I know that probably seems kind of crazy, but in terms of the amount of money and frustration those tools can save you, it's and then the ROI you can get on that over time, it's it's phenomenal. Xander, my problem is I don't ride the horse long enough. I always jump off way too early. So that is exactly what some of these tools. So I'm just going to go back to pick a stock. I don't know if there's a stock that you were in recently, but if we look at, okay, so what I would just call a normal setup here on a daily chart. So in this one, actually, it looks pretty tame, right? And it's just like, okay, well, it's easy if you get into something like this, and we're getting in here when it's at 95 and you're holding on to 99, and it looks pretty simple there. But when you're in the heat of it, the thing to keep in mind is there were some pretty big pullbacks, and it's just it's just kind of, so that's what I call kind of an easier stock. But if you look at, say, something like Netflix, it's like, okay, well, how do you trade something like Netflix? Well, again, what I'm looking for normally is just kind of a nice squeeze. And so if we don't have that, then what do we do? Well, on something like this, now what we're doing is we're kind of drilling in and just kind of like, okay, we're going back to ebbs and flows. It's like, all right, we're rallying and now we're overbought. Great, we can short it. Now we're oversold. We can try to cover that short. Or if we just want to play the momentum, it's like, okay, I'm just going to follow this momentum higher. And then when that ends, great. So, it just kind of helps you stay in like that and helps you manage it. These are available for Thinkorswim and TradeStation. I know we have some of them for interactive brokers, but they are, and so one thing that some people have done is like, gosh, John, I got Fidelity. What do I do? Well, a lot of times what people have done is they just open up a Thinkorswim account because it's free. They don't charge you data feeds or anything like that. You can put in like a couple $100. just as a balance. It's like a transfer. And then you just watch the charts on that, but you can still execute in Fidelity or wherever. And so that's something that some people have done as we, as we talk to them. And aren't the EMA cross and MTF trend tools essentially giving us the same information? Okay, so great question. So some of these do kind of interact with each other. It's just the different, it's just kind of, if we're looking at, say, Netflix right now. So Netflix right now, we can say, okay, based on the momentum, so if we're looking at 5 time frames, this is based on our buyers or sellers in control, just based on price bars. And this is just kind of more of, all right, if we're looking at a 1-minute chart, is it trending higher? Do we have crosses? So I would say that there's some similarities there. The logic is totally different in terms of how it's calculated, but with the EMA crossovers, we kind of get to see at a glance what's going on in 18 time frames, and it's just more of a, okay, is the path of least resistance higher or lower? And this is telling us, okay, if you're short right now, stay short. The momentum's on your side. So yeah, it's a little, the idea is similar, the logic is different, and then I use this more for momentum type trades, and I use this more for kind of getting a sense of what's the path of least resistance. Is it higher or lower? If that makes sense. Do I still use the voodoo lines? Absolutely, yes. So I don't have them on here, but I always like to know what the voodoo lines are doing. That's a, and I kind of go back and forth between TradeStation. I like looking at the voodoo lines on TradeStation. Obviously, they're available for Thinkorswim as well. All right. Yep. Hey, Ron, I see your test question. And let's see what's going on right now in the futures too. NASDAQ futures overnight, obviously taking a little bit of a beating. And, we're just been sitting here down about 60 points. So someone earlier was asking about scalping. So if you do scalp, the 1-minute 10x bars is also a pretty good one as well. You can just kind of get a sense of like, okay, you can see we're kind of going down, down, down. Then you can just stay short until this turns yellow. If it turns yellow, it just means it's gone back to neutral. So if you're short, you don't want to see neutral. You don't want to see neutral. You want to see momentum to the downside. And, you can see earlier today, I mean, we did get up to 78, 70, 86, right into those upper bands. And then since then, it's just kind of, so again, it just kind of gives you, interesting areas and different things like that that you can look at. Oh, you haven't addressed how to set these up, a flexible grid quadrant. So I would say a flexible grid is actually better. I just use a normal grid. So I know Danielle and Henry both use flexible grids. And I watch them use them. I'm like, you know what? I should use a flexible grid. That way I could just pop this out. And so I probably will rebuild these on a flexible grid. This is what I just called the normal 4-quad grid. If we are scalping, how do you set up the 10x bars? I would look at them on like again, if you're in for a few minutes, I'd look at the 1-minute bars. The 1-minute bars tells you a very clear story of what's going on in the world of scalping. I mean, if we come back here, you can kind of see, if you're scalping, it's like, okay, great. Here we are and we're cruising along. It's, it's like, I mean, essentially if it's yellow, I'm kind of waiting. If it turns green, I can go long. And then if it goes to like red, I can get out, just different things like that. And so at least it's like you're always on the right side. Now there's going to be some head fakes and stuff like that because it's a 1-minute chart, but you're never fighting. Okay. If you find yourself scalping and you're like fighting the market, that's super helpful because you're just never fighting it. Like the worst is, if you're like, oh, I'm so bearish. This market really, really is a turd blossom. And, and my trading mentor, Peter Borish, always said, John, discipline before vision, which means that you may have a vision that the stock market's going to fall, but have the discipline to at least have, clear direction in place. And so if you're going like, oh my God, this is a turd. And, if you get green here and you got momentum, here we are at 7,020. Great, go long. You don't even believe it. But I don't even believe this. I can't even believe I'm going long. Oh my God, here I am. I'm up 40 points. Okay, that kind of stuff. Again, that just means that you just divorce yourself from your opinion and then just go with the flow. It's a lot easier, especially for scalping. John, most importantly, what tequila could possibly taste good with club soda? Truly. Well, it's interesting you say that. So I try to avoid sugar. So if I'm going to have a cocktail, like I'm not going to drink a margarita or anything like that. So like a tequila and club soda or a vodka and club soda, although it's not a tasty drink, it's clean, it's very low in sugar, and it gets the job done. So I will say though that taste is, although I've gotten used to it, but it ain't a margarita. We'll put it that way. Ray, I like that idea. Don Julio 42 neat. That actually sounds good too. Oh yeah, more lime. That's a great idea. John, so for the snap and range indicators, are they good for determining support and resistance on a longer time frame? Yeah, so you just look at like the dailies, right? In the 2 days. Bob, John, seriously, have you looked how well the snaps line up with the dynamic profit zones? You know what's funny, Bob, is a couple people have mentioned that, and that's not even something like I took into consideration, and that's great. So yeah, what I may do is on on this is probably maybe add like the daily snap on here so I can kind of see where it lines up. So yeah, that's fantastic. I will drive carefully. Yes, I limited it to 2, and I think my car has auto sensors. So yeah, Bob, doesn't alcohol metabolize into sugar? So if you're trying to be sugar free, you have to be alcohol free. So yeah, it's just if you are, it's trying to find what's the lowest sugar alternative if you are choosing on a Thursday evening to have a cocktail. Does that make sense? So yeah, you're absolutely right. There's a no. It's the lowest way to do it. Pure green gets the job done faster. Will you touch base regarding your hardware setup? Yeah, and I think we used to have something on the site that showed like my rising desk and the specs on my computer. If it's not on there, we can certainly get it back on there, or again, just kind of email us so we can get that information to you. Any new scans coming out for the scanner? We are actually going to incorporate some of that institutional data into the scanner, so we're just looking at some ways to do that. So we are certainly looking at that too. Is there any documentation for the multi-range somewhere? Gary, I do have, so some of the slides here in this presentation, you can have a copy of that documents some of it. And then we can also, of course, take a deeper dive during the live trading and stuff like that. Can you show us one chart of just the multi-range on a stock on a 5-minute chart? Sure, give me two seconds here, 2 shakes of a lamb's tail. So, how that works, if I can find it. Dun, dun, dun. We'll see if I can navigate this here. So if you want to do something like that, then all you got to do is, I'm trying to find, I've got one with a white background. There it is. So let's say you drop this down to a 5-minute chart and you want to see the 5-minute readings. Okay, so a couple things you got to do. So first of all, of course, change this to a 5-minute chart. Now what's going to happen here is I didn't load the 5-minute settings on here. So I can still see the 30-minute and above. So those will all be on there. And you can see it's like, okay, great. I can see there's the 60 and the 20. And so I got a good sense of what's going on there. But I don't see is here, let's go back to PLT here since we were using that one earlier. But what I don't see here is, so the beautiful thing about this is on a 5-minute chart, you can see in real time, it's like, okay, great, here's that. But so let's say that you want to see the 5-minute overbought and oversold, okay? So all you got to do is you come over here, I just go to edit studies, I just do ST, which is simpler trading, and just say, okay, where's my multi-range tool? And if I can multi-range, I'm going to add it. So you see I've got additional ones added in, and it's like, okay, there's the multi-range. So I'm just going to change this now. I'm going to change this to 5 minutes so I can see those 5-minute readings. And then it defaults to all, which means that you'll see the label and the lines. If the lines are too much, you can actually just change that to just the labels. But in this case, I do want to see it. So we'll hit OK, apply. And now we'll be able to see when the 5-minute ones come in. So if you're a scalper, now you can just say, okay, cool. Now I can say, here's the 5-minute levels. Okay, great. And then you can just kind of, here's the 5-minute level there. And so if you're a scalper and you're doing like NASDAQ futures, that's how you'd want to do it. Does that make sense? So Again, I personally don't spend too much time looking at the 5-minute one because I'm just looking for some bigger ones. But you can see here that the 60-minute and the 5 line up. Okay, and so I do see right now on TLT, we certainly have some oversold readings, so I'd be looking for more of a pop tomorrow. Yeah, no, look, I think this is I believe it or not, even though market volatility is fun, these tools kill it in quiet markets. You just sit there and just kind of milk those ebbs and flows. And by a quiet market, I just mean something that's moving less than 1%. You know, we've had 3% moves recently. And again, the thing about this is if you're looking at the stochastics on a chart, you can't look at like 10 different time frames. This is telling you on multiple time frames, like, hey, what's going on here? And da-da-da-da. Bill B absolutely is saying, hey, those 5-minute readings can kind of blow through. Yeah, so here's the thing. If the market's having a more than 1% move, I just don't even look at the 5-minute ones. So it's those days when you're trading less than 1%, you know, like the S&Ps do. I mean, really 85% of the time, they're trading less than 1%. Well, then you can scalp those, you know, a couple points here and there. But certainly when things are this volatile, it's a lot different. Yeah, we can look at the NASDAQ here too, for sure. So, and now you can just kind of see some little ebbs and flows here. And of course, this is kind of after hours. Now here's the thing that I do is if I'm looking at, like I say, if I really want to tune into the 5-minute ones, well, guess what? I'm not going to really care what some of these larger time frames are doing. So if I'm truly just going to play like the smaller time frames, I may want to look at like the 5 and the 15s and stuff like that. So I could just say, you know what? I'm just going to come over here and just say, all right, let me just get rid of some of these because I don't need to see all these because I really want to play those smaller time frames, but I still want to see the labels. So I can come over here and just say, okay, for the 4-hour chart, I don't need to see when the 4-hour is overbought or oversold right now, because right now I just want to focus on, so I'm just going to say labels only, okay? And I'll show you what that means here. And then I can say, okay, well, what about the 2-hour chart? Well, I don't really need to see, I don't need to see the levels because that's like, I'm not playing those right now. I'm really just want to look at these smaller time frames. So maybe I'm going to look at the 5 and the 10 or something like that. And then, you know, the hour is great. I'm not necessarily too interested in those either. So I'm just going to change those to labels only. And then, and I just want to show you this so you can just kind of see if you just don't want too many on there. And it's like, okay, so now I can look at this and say, you know, great, I've got this 5-minute chart. And now I can still see if the, you know, the daily is oversold. I can see it right there. I don't need to see a huge line across, right? But now I can say that there and say like, okay, great. I can see when, you know, the 5-minute overbought happened, and then great, here's the corresponding 5-minute oversold. And so, you know, again, not a huge move, but pretty, you know, pretty decent little move there. So again, you can kind of pick your poison, so to speak, on the tool that you want to do there. Have you found the maximum of charts you can run on the F1 without slowing it down? Yeah, so I go, I do kind of watch the speed. So on, you know, on this one is actually not too bad. I have found that at one point I had like 5 of these. So how I do with this is I have a daily chart here, and then you can see I've got the larger time frame, RSI and stochastics. Now I don't put the RSI levels on here because I can see them right there. In this case on the larger time frames, but I do want to see the daily, you know, the pivots and stuff like that. And then over here, you can see I've got the levels as well. And so I used to have like 5, 10 of these charts like this. That was too much. So I actually cut those down and I just kind of look at one or 2 main ones like that. And then I just kind of cycle through the ones I'm looking at. And a lot of times what's happening is when you're trading, like here's the NASDAQ, you know, I want to see what the NASDAQ is doing here, because if the NASDAQ's doing something, guess what? My other stocks are too. Now, you can see right here, I did for fun today. I put on the 10 minutes. Normally, I don't look at the 10 minutes, but you can see you can get the 10-minute low. You know, the same thing works too on these smaller ebbs and flows. But you can see, of course, those bigger ones are a lot larger. John, any tips on how someone could swing trade using your grid, specifically if they have a full-time job? Yes, so absolutely. So first of all, with these tools here, you're going to spend most of your time on the daily chart, okay? You're not going to really care about what the 30-minute chart is doing and stuff like that too. The cool stuff is if you are trading, you know, kind of full-time, a lot of what your time is going to be doing is right here. on this grid quite a bit. And then I do like these because these just save a ton of time. So those are kind of my favorite ones right there. And then if you are using these other ones, you know, like Home Depot is a good example, where, you know, you can know in advance where kind of some of those levels are and stuff like that too. So certainly you can dive in here. It's just a matter of time frames. So if you are really like working full time, and look, when I was kind of learning to trade, I was working full time. So I just looked at daily charts and above, and I would just take those levels, and, you know, I could see where the levels were. I could place my orders and go to work and then come home and see what happened. So yeah, and honestly, I think it's a easier way to trade, just because it's, you know, you can't really screw it up psychologically, because you figure out your risk, you place your orders, and you got your stops, and you go to work. So you can't really screw it up mentally. It's real neutral, and then you're done. Cool, guys. Okay, cool. Well, gosh, we've been going for 2 hours, so hopefully that was helpful. I'm going to leave this page up here. So the main thing here I would say is, of course, you guys can go there and see the packages. So this is the link that you go to, simplertrading.com/tools. And then the main thing here is that, you know, calling us with the questions on this particular one is going to be tricky. It'll be way easier if you just email us. Emails if they're like, hey, I've got some of the indicators, but not all of them. I need the grid. Could I just do the live trading? And we'll chew through all those and get them answered. I would say if you do not have our newest tools, I certainly would take advantage of the $597 package to get them. You are going to love them. It's just, you know, there's things that'll change how you trade. And if you don't have any of our indicators, if you're like, okay, John, I just heard about you guys yesterday, and, you know, again, if you see the value of the investment, I would take advantage of it. It's $6K worth of indicators. You essentially get hooked up right from the get-go, and you're good to go. And of course, we'll teach you how to use them. So that's what we got. And again, you know, the idea is just hopefully how you learn. We'll give you a copy of this. This is being recorded, but you understand the ebbs and flows in this market and just can play them, you know, like you're surfing the waves versus, you know, struggling or anything like that. All right. Yeah, and B, sorry if I did not see your questions. If you want to post them again, again, sometimes I'll go through as I'm talking. I can certainly miss some of the questions and things like that too, but certainly happy to answer. I will leave this up here. There's the link. Again, here's the email. And then you just need, for this link, of course, you just need to type it in. If you click on this, nothing's going to happen. So you just type link, and that'll take you to the page. And if you have questions, just send us an email. And then otherwise, we will see you mañana. And then, so I'll say here, good trading. Because I'm just going to leave that up. That should be good trading, not goop trading. And then we go from there. So cool. So I'll leave this thing up. I'll answer a few more questions, and we'll wind this down. Yep. See you guys in the room tomorrow for sure. Awesome webinar. No, you're certainly welcome. San Francisco, I don't know. So we'll be there Monday, Tuesday. I know Tuesday night we got that poker tournament, which will be fun. I don't know exactly when I'm speaking, but I know it's certainly multiple times on both days, and I'll be hanging around. Do you have to buy it today, or do you have a few days? So I believe we're going to keep this page up for about the next 48 hours or so. So, you know, if you need a little time to think about it. Drive safe. I certainly will. Thank you. And all right, guys, cool. Well, have a fantastic evening. Thanks again for joining us on a Thursday night. Crazy market days. And, you know, whether the markets stay volatile or whether they calm down, I do think that these are the tools that can kind of help pave the way for you. So I was like, you know, looking forward to that. And you guys have a good night, and we'll see you. See you in the room tomorrow, and see you on the other side.